Hello everyone. In the last 2 years, Nifty IT has been seeing decline from its all-time high of 20%. If we examine the individual stocks, we can observe some negative returns. For instance, Infosys has declined from its all-time high of 20% and it's down by almost 5%. In the last month, HCL Tech, another prominent IT company, it's down by 2.23% from the last month. Even the TCS, the top IT company, has experienced the same. It has declined 20% from its all-time high. Overall, the IT sector seems to be underperforming from the year or so, and investors had to hold these stocks from the last 1 year. They or started to raise the concerns of what is the future of IT sector. This video, I will be explaining you to understand what is the reason behind the underperformance and more importantly, what is the outlook of IT stocks in the future. Before starting the video, I want to give you a quick disclaimer. This is not any investment advice. Please consult your financial advisor before making any investment decisions. The first key point that you should understand is that the US tech market and how US banking market will function. There are the primary clients of the all the IT majors in the India. They give a lot of back end work to Indian IT companies, and these IT companies export a lot of services to the US. Therefore, you should look at their exporting revenue. For example, take Infosys. Infosys export 70 to 75% of its money by exporting services to the US. What has happened? Why the US is not giving? So this is a basically a consolidation phase in their capacity as of now. They are not taking, they are not looking to hire people too aggressively. They are figuring out what to do next. So it's in simple terms, this is a consolidation for the US market tech industry. What is going to happen, or what is rather happening during this time in the US, is these companies, these IT giant companies, are deciding where the next layer of growth is going to come from. For example, if you go back 4 to 5 years, a lot of companies were focusing on a cloud storage. So cloud was probably the biggest area that every big company was looking at. And here is the narrative. They focus on the artificial intelligence. The people, these companies hire from the artificial intelligence. So here is quick flowchart, and it will be helpful you to understand about the Indian IT sector and what is the business model of Indian IT sectors in more nuanced manner. What happens is like, so basically when it comes to big banks or big tech companies in the United States, what they do is they decide to focus area first. For example, it could be the cloud computing, or it could be the cloud based storage, or AWS systems from Amazon, or cloud storage from Microsoft, and many more. And now you might figured out that Amazon is actually making more money from AWS compared to their retail segment. All these things are there that one should focus area is decided. Whichever is a booming area during this time, all the US tech companies, or majority of the tech companies, jump on the developing these expertise. So they first see the focus area. So after seeing the focus area, they will be going to the skills. So they want skills. This is where the IT companies, the back end work from the United States come to India. So this is where we get the India get majority chunk of the projects, and at least a large chunk companies will give this to India, because India is the largest IT exporter in the world. And the final step is going to the scale up. This is where these back end tech companies like TCS, Infosys come into the equation, and these companies will help the companies which are US based companies to scale up their areas of expertise very quickly. So this is a very simple equation, and this leads to a start and stop effect in the technology segment. So if you can't believe, Let's go and check what is the meaning of that, what I was about to tell you.
You see here, this is a consolidation phrase from somewhere around, from somewhere around here to somewhere around here. This is a consolidation phase. The price movement will be going up and down, and it will be moving somewhere around here, right? So is this the only let here let us analyze the historical data of this stock. So this is the Nifty IT. So this is, I'm betting on the index, so that's why I was explaining the index. So that was the part one. Not if you analyze the historical data from somewhere around here, which is on September, which is in September, which is in September 2018 to somewhere around here. Like you see here, this is on 2020 September. So how many days it hasn't moved? From 2018 to 2020 September. This is also September. So approximately about 2 years, Nifty has given 2 years. Nifty has given 0% of returns, right? So Nifty has given 0% of returns. And not only this, but see other also. So see here also, from somewhere around here, which is 2015 to somewhere around here 2018, there is 0% of return, right? There was a rally again from here to somewhere around here, 0% return started. So this is a stop phase, this is a start phase, right? So start, stop, and here also this is the stop phase. So stop, start, stop, again here this is a start phase. So there will be a start and stop mechanism, start and stop mechanism in this IT. Not only in this IT, but you see, go and check in the pharma sector, go and check in the banking sector. There will be a start and stop mechanism for every stock. This is from 2015 to 2021, and I will be showing you much more. So see here, this is from 2011 to 2013. So there is 0% of return, and this was the stop mechanism, and this is start, right? Now it has started. So how many days it has took off from 2000 for 2015, from 2013, 2 years it has a rally. After 2 years again it was started. I explained in the before picture also. This is a start, this is a stop, and this is a stop mechanism. So start mechanism, stop mechanism. So this will be every time. This is 2014, and now see here, this is from 2015 to 2021. This is the stop, start. This is a stop mechanism from here to somewhere around, we don't know how many days it take, but maximum, if you analyze the previous historical data, maximum of 1336 days was stopped. So the stop mechanism at most is to 1036. So already we completed 635 days, and how many more days left? Approximately around 400 days left. If 400 days, if you got the 38% in the 38% or 22% returns from here to here also, from here, from today's price to all time high also, there is a 22% of gain. And from this, there will be a start mechanism. So this will be the start mechanism, and this, there will be a rally after this. So how many are, if we take this rally, there may be a 30% rally. So 52% of gains. How many days it take? It may take 2 years or 3 years, maximum of 3 years. Let us take maximum of 3 years. What is the CAGR you will get, right? So if you see the margin of safety also, the margin of safety is very high. If you take the CAGR also, if you compounding the CAGR also, you will be getting approximately 18% returns, which is a very good returns, right? Very good returns. If you see the mutual fund returns, it is approximately around 12% of returns. You are making 18% of returns without doing anything from here to somewhere around here. So this is a very low risk investment, because we are not betting on the individual IT stock, we are betting on the entire industry of IT. So this is a low risk, high reward game, right? Low risk and high reward game. If you may consider, you can consider about putting your 10% of your portfolio, because you are not putting on the single stock, you are keeping on the entire IT industry. So you may purchase of 10% of portfolio. This is not any investment advice. Please consult your financial advisor before making any decision.
This is point I'm trying to drive home in very simple, that there is something called as start and stop happens for every Indian IT sector company. Why does this happen? It's very simple, because when the big tech companies in the United States, it tries to scale their technology on which it is focusing on, this is when the Indian IT companies make most money out of it. So this is a very simple equation, and therefore I see very limited point in taking or building huge chunk of positions in individual IT stocks. I don't know which company will start doing this as quickly as possible. That's why I was investing in ITBs, and that is the reason why the IT sector is not performing well enough. And this is the first reason. The second reason is that the second main reason to decline of these companies is that US increases its interest rates. As indicated on my screen, the Fed government has steadily raised the interest rates since March 2022, reaching all-time high of 5.33 as of now. This rising Fed rate has made borrowings more challenging for the United States businesses, which are maybe the tech businesses or banking businesses, as it leads for higher borrowing costs. Consequently, US companies tend to cut down on IT spending, impacting Indian IT sector that rely most significantly on the US based businesses. The good news is that the high interest rates are going to cut in the short term. Like it may take 4 to 5 months. We don't know. We can't expect when the US Fed government going to cut. When they feel that inflation comes down, they will going to cut the interest rates. So this will be directly impact to the IT companies and also the banking sector. Before explaining much more, I also invested in Amazon and Bank of America, and also some companies like Apple, and and some more. I will be making another video about that. So coming to the topic, while there may be a further rate increase in the short term, the consequences is that when the interest rates will eventually come down, which will boom the economy and lead to increase in IT spending. To sum it up, while IT stocks may not be performing well at present, there is a potential for a rebound in the next 2 to 3 years. The positive indicators include a strong pipeline of new contracts that are coming to the India, and they also the decrease in the US interest rates, and they are focusing on areas called as artificial intelligence and some, but eventually they are coming out with artificial intelligence. They are mainly focusing on the artificial intelligence. I think they are particular about artificial intelligence, and maybe as soon as interest rates cut by Fed government, the US companies will give projects to the Indian IT sector, and Indian IT sector will be booming up. Now let's briefly discuss about TCS buyback. As you know, TCS has announced buyback of 1.12% of the total paid up equity. The buyback price is somewhere around 4,150 per share. This shows the participation of buyback is a good idea, but depends upon the company. The company believes that the IT will be rebound. That's why they are started to buy back as much as they can. And also maybe they didn't found good opportunities to invest in. That's why they are investing in their own company. Maybe there are lots of reasons, but TCS will rebound, and they make a very good profits. It's a top company, top notch company, and the firm has a very good success rates, and they had a track record. I hope you found this analysis helpful. If you enjoyed this, please hit the like button. If you have any feedback or questions, please feel free to leave them in the comment section. You can do consider subscribing to my YouTube channel for more content. Well, I think you liked my in-depth and exclusive analysis of stock. Thank you for watching. I will thank you for watching until the end, and I will see you in the next video. Until then, goodbye.